Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be discussing Bitfarms, specifically their Q1 results that were just released yesterday. Now this is a company I'm personally invested in. It's my second largest position in the Bitcoin mining space, and I'm really excited about the results for a number of reasons we're going to talk about in today's video. Now, in addition to that, I wanted to mention in the affiliate links below, you'll notice a new one, BitBuy. This is a company that I currently use myself. If you're based here in Canada, you're looking for a safe and secure place to purchase your crypto, I would definitely recommend it. They're running a promotion right now. If you sign up, we each get $20, so benefits both of us. In addition to that, I'd be super curious to hear your thoughts on Bitfarms and their Q1 results in the comment section below. So make sure you drop a comment. And if you're not subscribed to the channel, McNallie Money, feel free to join. We'd love to have you as part of the community. Now with that being said, let's get into today's update on Bitfarms Ltd. Okay guys, so that's right. Today's video, we're going to be taking a look at Bitfarms Ltd. Now for those of you who've watched this channel for a while, you'll know that this is one of my biggest positions in the crypto mining space next to Hut 8 Mining. One of my criticisms of this company was that they were expanding into multiple different countries at one time. So they operate in Canada, the United States, and in South America. However, that strategy has proven to actually be a benefit to Bitfarms as we're starting to see some new laws or bills being looked at in the States that are actually talking about a 30% tax on the input energy associated with Bitcoin mining. So it's really come full circle here. This is exactly why I like to diversify in terms of my positions within the crypto mining space, because you never know how the politics or the political environment is really going to play into a new and emerging industry like Bitcoin mining. Now we're going to talk about that as we move through today's presentation, but it's definitely nice to see Bitfarms earning some respect in the space. Now this was as of close on May 12th, so Friday of last week. They were down about 4% on the day. It was a bad session for Bitcoin itself to close out at $1.32. This is the Canadian ticker, so the Toronto Stock Exchange, BITF. Bitfarms also trades on the NASDAQ in the US under the same ticker symbol. And you can see based on this close, market cap is now sitting sub $400 million Canadian, which I think is definitely very attractive given the growth potential and the hash rate that we're starting to see from Bitfarms and that are planned over the next few quarters. And I've actually got a 6-month chart pulled up on the screen. You can see all the way back in December of last year, this company was trading close to 50 cents at risk of being delisted from the NASDAQ exchange. They then went on an absolutely massive run heading into the start of the year. So mid-January, they were up over $1.60, so a 3x return. And they've really been trading fairly flat over the last couple of months, as we've seen Bitcoin kind of hover in that range of about $27,000 to $30,000 US over the last few months. Now, the reason I wanted to put out today's video on Bitfarms is because they just reported Q1 earnings for 2023 with adjusted EBITDA of $6 million, so very healthy results. This came out on Monday, May 15th, so yesterday. You can see they've accelerated their plans to get to that 6 exahash target, now fast tracking that to September of this year. They've now hit that 21,000 Bitcoin milestone, 1,297 Bitcoin in Q1 of this year with 379 in April. And they're really doing a good job at managing costs despite the growth that we're seeing from this company. So the direct cost of production was about $12,500 per Bitcoin. You'll see a little bit later in the article, their cash cost per Bitcoin was $17,600. And even with the depressed price in Bitcoin that we've seen over the last few quarters, they were still able to average a sale price of $22,500 during Q1, which means they were still well ahead by about $5,000 in terms of their input costs compared to what they're receiving for each and every one of these Bitcoin. Now, I also wanted to spend some time in today's presentation talking about their expansion at their Rio Cardo facility in Argentina. So this is the South American location I talked about in the intro. They've now received their operating permit to power up to 100 megawatts at this location. And they're continuing to ramp the exahash and the capacity in South America each and every month moving forward. Now, the other metrics that stood out to me in this press release were the gross mining profit. So that's improved to 42% compared to only 33% in Q4 of last year. So that's definitely a bullish indicator for me. The other thing that I was really pleased to see is their general and administrative expenses were actually down 29% from Q4 of last year, landing at $6 million for the quarter. So they're managing their costs very effectively. So with all those things taken into consideration, their net loss was $2 million for the quarter, which works out to about 1 cent per share compared to 17 million or 8 cents per share back in Q4 of last year. So again, moving in the right direction. The only thing that kind of stood out was the overall cash cost did increase. So we mentioned $17.6 thousand in Q1, which is still very competitive in this industry, but that's up from $16,800 in Q4 of last year. However, when you look around pretty much at anything in the world right now, things are costing more than they did a few months ago. So I'm not overly concerned considering this is only about $800 per Bitcoin, but definitely a metric or number that I want to keep an eye on as we move into Q2 and Q3 of this year. Now they then go on to talk about some liquidity and their balance sheet. We're going to look at this later in the investor presentation, so I'm not going to spend a lot of time on it now, but overall from my perspective, a very positive and strong way to start the year. And again, starting to grab some of that investor attention, perhaps away from some of the other miners in the crypto space. So shifting gears a little bit, we're going to jump into the investor presentation. Now I know we've covered Bitfarms extensively on the channel, so I'm not going to do a full summary of their operations, but I did want to bring up this slide here that talks about the investment highlights or thesis behind this company. You can see first and foremost is that geographic diversification, which they feel is a major differentiator. Again, I was hesitant about this at the start, but it is proving to be a real benefit to the company as we see some tighter regulation coming in here in North America. The scale and expertise, so they've got 10 farms in operation. They've been running for over 5 years, and they're currently powering around 2% of the overall Bitcoin network. Now, the third highlight mentioned here is their vertical integration or their vertically integrated strategy. We've talked about this a lot on the channel, the pros and cons of the hosting model versus the vertically integrated and owning your own facilities model. I personally like the vertically integrated strategy more, so that's definitely a check mark in my books as well. Efficient producers, so we just talked about some of those direct costs and their Bitcoin production. And then the fifth and final point is really around that financial or fiscal discipline, the strong balance sheet. Bitfarms has been aggressively paying down debt over the last few quarters. And again, we're going to refresh that on the last slide of today's presentation. Now, speaking of vertical integration and this geographic diversification, this is a great slide that shows their countries of operation. So you can see in Canada here, they have 5 locations in the province of Quebec, so Eastern Canada. They've got 1 in Washington in the US, and they also have facilities in Paraguay and Argentina, which represents their South American or Latin America portfolio. And it's worth calling out that these are the current megawatts under operation at each one of these sites. However, they have those aggressive growth plans in Argentina that's going to exponentially increase the amount of capacity and the miners that are located in this country. And that's really a perfect segue to this slide here, which focuses in on that Rio Cardo facility in Argentina. You can see they honed in on this location because this is home of a stranded natural gas generation asset. So they're able to leverage that through an 8-year power agreement and really harness some of that stranded natural gas at this site. They've commissioned that first warehouse, of which 18 megawatts out of a total 50 is in production, fully permitted for up to 100 megawatts at the location, so 2 warehouses total, and the potential to expand up to 210 megawatts at this location once they're fully permitted. So if we jump back to this slide here for a second, you can see Argentina with the potential to reach up to 210 megawatts surpasses the entire portfolio combined in terms of their 9 other locations. Now moving along, this slide here talks about those direct costs associated with Bitcoin production. Again, as a reminder, Q1 of 2023 came in at $12,500, and that's really a trend we've seen over the last couple of quarters, not exclusively with Bitfarms, but with the entire industry as we've seen the power prices increase. So if you look back to Q1 of last year, came in at about $8,700. So about a 50% increase year over year if you're looking at just direct costs associated with producing each and every Bitcoin. And you can see there's a number of factors associated with these costs listed on the left here. So the network difficulty rate, the exchange rate between US and Canadian dollars, and of course the power costs or energy costs associated with each one of these facilities. Now to end out today's video, I wanted to focus on this slide which talks about the increasing financial flexibility we're starting to see from Bitfarms, and this is what I mentioned in that initial press release. So current liquidity as of December 31st, 2022 was sitting at about $38 million, 31 of which was cash, $7 million representing digital assets. And if we jump back to the press release, you can see as of March 31st, this has actually increased $29 million now in cash, along with 435 Bitcoin representing approximately $12 million. So all in, you're looking at about $41 million of total liquidity as of March 31st. Compared to about $38 million at the end of Q4. So they've increased by about 10% or $3 million, which is great to see. They also have a higher ratio of digital assets or Bitcoin. So really starting to increase their reserve or that HODL strategy, which again was one of my criticisms about Bitfarms compared to Hut 8 mining. But the big moves we've seen here is actually aggressively paying off debt in 2022. Now, as of December 31st, they still had $47 million of debt on their books. That was reduced by $118 million since their peak in June of 2022. So massive repayment plan during the year. And subsequent to year end, they've put in an additional $23 million in debt repayments as of February 28th, which is down 86% from the June 2022 high, and $21 million financing for their miners was reduced and settled for $8 million in cash, saving a total of $13 million of principal and interest. So great negotiation tactics from the team at Bitfarms. And then it's also worth mentioning that they were able to get out of $45 million worth of capital obligations for miner purchase contracts. So that's been extinguished. Again, giving them a lot more flexibility in terms of how they operate their business moving into the back half of 2023. So with that being said, you guys, this is definitely a company that I'm super excited about and getting more so as the days go by here. I think their strategy of focusing on expansion outside of North America is starting to pay off for the company. We've seen aggressive growth in hash rate. We finally got the permits in Argentina that we were waiting on, and they're starting to increase their liquidity or their overall Bitcoin reserve. So this is one that's really firing on all cylinders in my personal opinion. I'd be curious to hear your thoughts in the comment section below, especially if you're holding shares of Bitfarms yourself. If you're still watching the video at this point, hopefully you found some value. So make sure you hit the like button. And if you're not currently subscribed to the channel, McNallie Money, feel free to join. We'd love to have you as part of the community. That's all for now. Thanks for watching and have a great rest of your day.